Hey guys, John.Hunter coming back again with another rate update. This one for the week ending in 5/16. You know, this week we saw mortgage rates trending a little bit higher after last week. The Fed left the Fed funds rate unchanged. 30-year fixed is averaging around 6.99. 15-year about 6.1. FHA 6.91. VA 6.78. Down payment assistance about 7.25. This is all via bank rate, you know, the little chat bot GPT helping me out with different averages. So it's just a trend. It's up just a little bit over last week, but nothing too crazy. It's all about, you know, the Fed met last week and they were talking about, they left it unchanged. Everybody expected that, but they were just talking about the risks to inflation, which of course was tariffs all over the news last week. And that's why they were trending a little bit higher. They were worried about the effect long term. And then, of course, what happens? Come Monday, they made a deal with China. Now the tariff issues, for the most part, is off the table. And they switch gears and say inflation's still a problem because now with no tariffs, the economy could take off and cause inflation. So we're damned if we do and damned if we don't, right? You see the market moving one way because of one reason, and they just pick a new reason. So really, they're just unsure, right? And I think the message here is overall, we have to look at the current market as suggesting that the higher rates are likely to stick around for the short term. And, you know, I'm cautiously optimistic that we're going to see them gradually coming down as more and more inflation-friendly news comes out. We saw a good one yesterday, PPI, surprised the market a lot. So I think if we continue to see weakness in some of those reports, we'll see that gradually come down. I'm still holding out hope for a June cut, although the market's not real hip on that right now, but you know, that changes in the blink of an eye, right? So we'll see in the next few weeks on that. That's always the answer, right? We'll see, because it's always about those economic data that comes out, you know, and I'm still holding out hope. And I do truly believe we're going to get that aha moment where there's going to be a report or an event, what I've called in my previous videos, a black swan event, that we're going to see that is going to be a game changer. It's going to tip. The whole sentiment's going to change, and I think we're going to see rates come down a lot quicker. But at this point, you kind of have to just go with what they're saying. If you find a house and you can lock a rate, you know, we're trying to play those dips because it is a little bit of a ride, right? We're seeing it just seesaw back and forth. The trend has been relatively flat this year, but it's down since the end of last year. So we're just going to have to go with that. You know, there's a lot of activity. Homes are starting to sell. More is coming on the market. I'm just not 100% sure we're going to see the gangbusters that I was hoping for. And a lot of that comes from the market not really deciding which way they really want to go. It's just very difficult to watch them use tariffs as a reason for rates to go up. And then when that issue goes away overnight, using just another issue to continue that trend. It's a little frustrating to watch, but at least we got some unemployment report that seemed a little bit more reasonable this week. Some of the numbers that, you know, they came in at or below expectations. So that seems to trend in the same direction, and the market's going to wake up to this eventually. So we'll just have to see. You know, we live in strange times and there's a lot of stuff going on. I think most of it's good for the economy overall, and then but we'll have to see what it does for rates. So hey guys, if you have any questions, once again, remember those rates are based on credit score, loan amount, loan type, property type, first-time home buyer, not first-time home buyer. There's so many factors go into it. That's why I give an average, because it doesn't apply to everybody. Some people are locking in a lot lower. Some people are a little bit higher. It really depends on what you're doing. So if you have any questions, give me a call. I'm your guy, John.Hunter, your mortgage guy, coming back to you every week with content and rate updates. So have a wonderful weekend, and I will talk to you soon. Bye-bye.